commodities time now on Business Morning, and we're doing this with Senior Manager, Financial Derivatives Company, Dumebi, Uluwale Dumebi. Good to have you physically in the studio today.
Yeah, good to be here.
Yeah.
Good morning, Ini.
Good morning. And you come with inflation projection. We're expecting that, I think next week, it's supposed to be about 15.
Yes.
So there's a projection from FDC that is going to ease to 21.79 from 22.22, which is where we are now. That seems like a major drop. Not so major, though.
Not so major. I think the important thing is just to look at the month-on-month trend as to why we even think, as to why inflation would likely decline. So between June and July, we've seen significant changes. So let's start with the commodities market in itself, where food prices are, declining.
That's because of harvest.
Yes.
So let's not celebrate it too much.
Ini?
Because it's temporal.
Well, it is temporal, but the truth is the numbers will reflect that. Right, the numbers are likely to reflect that. I mean, again, with food prices, we do know that there are a lot of factors, and food prices still account for the largest share of Nigeria's even revised inflation basket. So what that tells us that movement in food prices or even stoking factors or drivers towards food price movement will still be very prominent for us to watch. And seasonality is a very big part of that, right? So we can, when we mention the planting season and we look at the impact of that on food prices, we also need to take account of the harvest season and how that would impact food prices. So that is one thing to mention. Then within that period as well, that between June and July, we also saw, and this is the beginning of July now, we also saw petrol prices decline, right? So that would also impact the headline inflation number, and to an extent the month-on-month inflation numbers, because beyond even petrol prices declining, we also saw some marginal declines in diesel prices as well. And the reason why this is important is because diesel trucks are what we use to transport food across states in Nigeria. So a decline in, diesel prices would also have an impact on food prices. Then as well, you look at the exchange rates, right? The Naira has relatively been stable. The official market, even the parallel market as well, we did see an appreciation at the parallel market on a month-on-month basis. Between July and June, the parallel market has actually appreciated about 2-3%. And so what that means is that that would also impact the imported food items, and then also that would also impact, the prices of imported food items, which are likely to also trend downward. So when you put all of those, together, we are seeing that there is that downward trend that would most likely be reflected in the inflation numbers. Not to say that there are not risks, especially because of the recent increase in, petrol prices that we're seeing, and the uptick in global oil price, and how that might keep domestic petrol prices up. Keep the current upward trend sustained for quite a while. So that's a very potent risk that we also need to watch out for. I think another thing to also watch out for is the recent flooding in major food states, and how that might also significantly impact food supply even with the harvest season. So that's something that we need to watch out for in terms of risks that could, alter this potential downward trend in inflation.
And I guess it's also important to state that the MBS works with data from the second week of the month. Second week of the month.
First 2 weeks.
Exactly. First two weeks of the month. Exactly. So that's what they capture.
Yeah.
Exactly. And then still talking about the factors driving it. So we know Dangote is the market price controller in the country, and whatever affects the oil and gas, especially the pump price, also feeds into food and transportation. And so we know that his CNG trucks, that's supposed to start April 18th, I believe. I think this week he received about 4,000 off that. I wonder how long we would wait to see the impact of that. I mean, because it's supposed to reduce the cost, logistics cost, and that we see is supposed to also reflect. Hopefully, retailers will allow that to reflect. So I wonder how long we might have to wait while we celebrate the news for it to reflect in prices.
Yeah, I mean, it wouldn't be too far-fetched to still use the same 2 weeks to a month time lag that we have for when global oil prices increase, and then it also reflects in the domestic commodities market. It wouldn't be remiss.
Would it be 2 weeks or 2 months for global oil?
Well, it's between 2 weeks to 2 months.
Okay.
So the reason why it's between 2 weeks to 2 months, because sometimes you would have already purchased, most times, And then sometimes if the prices are too high, they could probably follow that trend just to make sure that they're able to break even, you know, instead of getting getting more crude oil at higher cost. So they try to recoup that cost with the reserve, with the ones they haven't sold yet, so they're able to now purchase. So that's why I said 2 weeks to 2 months. So it happens within that time period. And so it wouldn't be remiss to say that that's almost how long we might also have to see and just watch the impact of the CNG trucks and how they would significantly reduce distribution costs and logistics costs, and then that now would feed into commodity prices. And remember, right now, the CNG trucks are not for food, you know, transportation. They're just for, you know, transportation of the petroleum products. And so it depends on how that impacts the price of the petroleum products before we now see that trickle down.
So there's a long chain to wait for.
Yes, there's a long chain to wait for.
It's supposed to reduce the cost of logistics for the pump.
Yes.
So before they move from there to the products, and then from the products
to food prices.
To food and transport. That's another one. But, you know, all of this we're talking about, Ghana is doing so well. We saw the inflation. I mean, we were shouting at how, you know, inflation hit 54% in December 2022. Now they are 12%. And their currency is looking good. Good news is coming from Ghana in recent times. I wonder what lessons we can learn from them.
Well, I mean, a lot. What we are seeing right now with Ghana is very strong moves with the federal government in terms of, number one, fiscal consolidation efforts, right? Remember, Ghana is coming from a period where they had defaulted on debt. They had to go through a whole restructuring phase. They were on with IMF programs as well, and they had to take the very painful path of, you know, reforms, not just on fiscal reforms now, but even also institutional reforms to ensure that the government's coffers are well buffed up, to ensure that they're able to meet up with, you know, significant payments that they had to make. That's one. The fiscal consolidation efforts are doing a lot. And then on the currency side, we also saw a very aggressive, you know, accumulation of gold reserves, right? And that has significantly supported the Ghanaian
Nigeria
cedi.
is also accumulating gold.
As a matter of fact, it is a trend across African central banks as of today. The Egyptian central bank is doing the same thing. South African Reserve Bank is also doing the same thing. Nigeria is doing the same thing. We're also seeing some of those moves even with Kenya and even with Morocco as well. So across Africa, we are seeing that trend, especially the top economies. We're seeing that trend of a strong, you know, demand and accumulation of gold reserves. And one of the reasons why this is very particular is because of, number one, we are seeing gold prices significantly increase because of the global uncertainty that we're seeing and the volatility in the US dollar, which most central banks of most countries have their foreign reserves in US dollar. So to show up against the volatility of the US dollar, they're accumulating gold. And what that does is just helps to balance, you know, their currency as well. And again, beyond that, it also somewhat supports investor confidence, because now investors know that central banks are not just relying on the movement of the US dollar to support how their currencies perform globally amongst other emerging markets. And with the improvement in investor confidence, alongside positive real rates of returns, because right now across Africa we're also seeing positive real rates of return where central banks are still maintaining that, you know, tight monetary policy stance, whether by holding or by even cutting, you will still see that rates are still favorable, and so investors are incentivized both short-term and long-term. And on the long-term side, we're seeing that significant inflow of, you know, private capital into long-term investment. So from infrastructure, we're also seeing that with Ghana as well. And the inflow of that capital is strongly supporting forex inflows of the forex space, and also supporting, you know, the currency, and also then, you know, supporting the inflation environment.
Well, unfortunately, our own FDI, we saw capital importation capital, and it wasn't looking so good for FDIs. Even though for the hot money, the portfolio is about 92%. That's dangerous, because I mean, these guys can just wake up and up out of the country, and that creates a lot of. But anyway, let's be happy with what we have and work on that to get. Perhaps we have to accumulate more gold for our reserve. Thank you so much, Dumebi, for your time on the program.
Thank you for having me.
Let's take a break. When we come back, Ladi will be here to tell us what's going on in the global space. Please stay with us.